Hey everyone, welcome to Alpha Insights. I'm Asha.
And I'm Brittany. Great to have you with us. And hey, if you have questions while you're listening, drop them at stockalpha.ai.
All right, quick headline to kick us off. The market just took a nasty swing at chip stocks this week after geopolitical news. Prices fell fast, but we think the selling might be telling the wrong story.
Exactly. So, the real question here is this a change in the fundamentals of the AI data center build-out, or just short-term fear? I mean, when you look at the data, the build-out looks intact.
Let's start with NVIDIA, because you can't talk chips without it. Last quarter, they printed $68.1 billion in revenue, up about 73% year over year, with data center revenue near $62.3 billion.
And for the full fiscal year, they reported $215.9 billion, up about 65%. Then, management guided to roughly $78 billion next quarter. Analysts note these numbers are unprecedented.
Yeah, that's a good point. The point everyone misses is compute demand isn't a light switch you flip off because of a geopolitical event. Hyperscalers have multi-year capital plans, and they can't just cancel GPU orders overnight.
Right. The cloud doesn't have a pause button. So when NVIDIA pulls back on a macro-driven sell-off, data suggests that pullback is more about fear than a real demand problem.
Okay, short reactions. Chips sold off hard this week.
Right.
Down about 6.5% for some of the broad chip names in a week, which feels dramatic.
Now, while everyone's eyeballs are on NVIDIA, the rest of the stack is quietly doing the heavy lifting.
Micron is a perfect example. They posted $13.64 billion in quarterly revenue, up about 57% year over year, and management said high bandwidth memory capacity is sold out through the calendar year. So supply constraints are actually creating pricing power.
Right, and projections for the HBM market have been revised up. The market could grow from $35 billion in 2025 to $100 billion by 2028, according to some industry studies. That's a big infrastructure tailwind for memory makers.
And then there's TSMC. They control roughly 72% of global foundry revenue and are talking about gross margins in the mid-60s for the quarter. When every major chip, GPUs, mobile silicon, you name it, routes through their fabs, that's not a small business.
Exactly. The business models here are long-term and capital-intensive. A short news cycle doesn't change wafer starts or multi-year capacity builds.
Now, a quick word on advanced micro devices. They're the credible challenger in data center GPUs. Revenue growth continues, and inference workloads are a fresh tailwind. The stock's off its highs, which has some analysts watching for repositioning.
So, you've got NVIDIA leading the charge, memory makers like Micron capturing price upside, foundries like TSMC with scale and margin expansion, and advanced micro devices gaining share in inference. That's a pretty strong ecosystem.
Totally. And for listeners who like higher risk ideas, there's a smaller company doing interesting work deeper in the data center stack. POET Technologies.
POET makes optical interposers and transceivers, stuff that moves huge amounts of data between chips with far less power. They recently landed over $5.6 million in initial production orders and have partnerships that target hyperscale data centers.
This is a pre-revenue or early revenue ramp story for many investors. The optical transceiver market could double from $5 billion to $10 billion in a short window, so the upside, if the tech scales, can be real. But of course, this is higher risk and longer horizon.
Important to say, this isn't a recommendation. Analysts note the potential, but also point out execution risk and the usual small-cap volatility, presenting this for informational purposes only.
Exactly. No personalized advice here. The overall takeaway, though, is that the sell-off looks more noise than signal. The hyperscalers are still committed, chips and memory are largely sold out, and the physical infrastructure investment continues.
Yeah, and while the war in the Middle East and oil price moves are real and worth watching, Data suggests the multi-year AI build-out is a capital commitment, not something you unwind on a headline.
So, to wrap up, quick key takeaways.
1. NVIDIA's numbers show demand remains extremely strong. 2. Micron and TSMC are powering the physical scale with sold-out capacity and expanding margins. 3. Advanced micro devices is gaining traction in inference workloads. 4. POET and optical components are an interesting, higher-risk way to play infrastructure. 5. This week's sell-off looks largely fear-driven, creating dislocations analysts are watching.
Nice. Final reminder, this is market analysis for information only, not investment advice. If you've got questions, we'd love to hear them.
Head over to stockalpha.ai, where you can ask us anything in the Q&A feature. And while you're there, check out more market content. Thanks for listening.